So anyway, crack on with my presentation. So I was given these three questions, the same as Jim. What is the value of a network to a customer insurer? What issues and risks exist in building networks, and what opportunities do building networks offer our market in the future? These are to be brought to you from a builder's perspective, so I think it's only right I'll just give you a very brief overview of the Gelder Group. That's what it looks like. This was a company I set up myself under the name of SP Gelder Builders back in 1988. So we just celebrated our 25th year of business. And now we've ended up with all these associated companies and different divisions. And I would say I could run that whole business in about 1 week a month, except that is for this division, which is where I find myself spending about 70% of my time. It's a division that's that we're very proud of. We've completed fulfilment on over 100,000 claims, so we kind of know what we're on about, and or we believe we know what we're on about anyway. And it all started with this property here. This was the first ever Gelder new home, and we sold this to this guy here, whose name is his name's Barry Thompson. At the time, he worked for a company called McLaren's. He was an area director, and Barry said to me, "Hey Steve, do you fancy doing a few insurance building claims? You want to get into our market? And if you do, I can maybe put a bit of work your way." And I said yes, and I'm really pleased that I did, because I've really enjoyed the last 22 years of working in this industry, and it's been very good to me, as you can see from this photo here. So this was me 22 years ago. Jim is actually the same age as me. I felt really bad when I saw Randy Pawn. She's 47, and he was dying, and he looked more healthy than I do. So the you buggers have got quite a bit to answer for. Anyway, it always, to me, comes down to these 5 rules here. These are the 5 rules of business, which are dead simple: sell more, spend less, make friends with the clients, cheer the staff, and watch the cash. But it's always question 3 that I stumble on when I'm in the insurance world. Make friends with the client, be so close to them you know exactly what they want. On every insurance claim, it just appears to me we have far too many bosses, and it is a question I can never ever nail down. So if I get nothing else out of today but understanding a little bit more of who exactly is the client, as far as I'm concerned, it'll have been a good day. So cracking on with the presentation, what is the value of a network to customers insurers? Well, I'm not going to spend too long on these, because these are pretty much the same as what Jim says. The last 2, I don't actually think we're very good at leveraging buying. And continuity of work, it's been critically important to us for the last 5 years. Is it as important now? I don't really think it is as important as it once was from a builder's perspective, but I'll explore that a little bit later. So that's the first section out of the way. So what are the issues and risks that exist in building network? Well, with this section, I could literally talk to you till midnight, but I'm pleased to say I won't do. I've picked out what are the 2 biggest issues in my opinion. The first being payment. It's an old cherry, but what I've done here is I've got a graph of all the people we've worked for over the last few years in insurance. Now, I'm not pointing a finger at any company on there, so you don't need to read anything into that. They're all the companies we worked for, but if you throw that into a sausage machine, we can produce this graph here. The blue line is our insurance debtor days over the past 5 years, and the green line is everything else we do in Gelder Group. So 70% of Gelder Group averages 24 days to be paid. Yet the rest, the insurance part of the business, it takes us on average 79.4 days to get paid. And then that can feed into this graph here. So we look how much it's costing us as a company to finance this. The green line, again, is all areas of Gelder Group except insurance, and that costs us around £20,000 a year to finance in interest alone, forgetting all the ridiculous charges the banks want these days. But when we come to insurance, it takes us on average, it costs on average about £65,000 a year just to finance that debt. But that doesn't tell the full story, because when we get really busy and we go into what we like to term as surge, we have to implement our surge plans, and just at that precise moment when we need as much cash in the business as we can get, the payment terms go out to about 110 days. So this then costs us another £30,000 or £40,000 a year. But not only that, it totally buggers up your cash flow. So it makes it really difficult. It makes it even more difficult to manage a surge situation. So There's a few builders in the room. I guess everyone would confer that that is pretty much the biggest issue in this world at the moment. And then the second issue is this. It just appears to me to be too many people involved in every claim. So I've tried to set up a little fictitious claim. This kind of process goes on every day of the week in our industry. So I've taken a claim here, and we've got a policyholder who in this instance got a broker, and they put a claim and it ends up with the insurer or underwriter. It's an escape of water claim, so the insurer appoints a drying company, very efficient, they're out within 48 hours, a couple of dehumidifiers in the property, and they'll take a photo of the damage when they meet the policyholder for their own files. At the same time as appointing an underwriter, the insurers have appointed a validator. I'd never heard of a validator 3 years ago, but these are popping up all over the place now. So the validator is appointed, and he turns up 2 or 3 days later, and he offers a cash settlement to the policyholder, and he measures everything up. And while he's on site, he also takes a photo of the damage with the policyholder. But on this occasion, the policyholder didn't want a cash settlement. What she wanted was some fulfilment. She wanted the property put back together as it was pre-loss. So the validators send their file and details over to a network, who will then appoint someone like Gelder Group. So the first thing we do is send out a building company surveyor. And the building company surveyor goes out and meets his policyholder. Very nice lady. We look at the claim and measure it all up, and we also take some photos of the damage while we're there. We submit that estimate back to the network, but this causes a problem because our quote is £2,000 and the validator had said it was £1,000. So the network's owned by a loss adjuster, so it's only right that they then send a loss adjuster out to have a look at the job. So a loss adjuster pops out 2 or 3 days later, and the first thing he does obviously is he takes some photos of the damage. So we took some photos of damages, and then there'll be a period in negotiation where he'll phone us up and just say in this instance we agree at £1,900. So he'll put that back into the network, and the network will finally ring us up and say, hey, we've got this approval, are you good to go? And we'll say yes. Who's doing the asbestos test? Which then follows a bit of a bugger moment. And well, not to worry, because we've got a relationship with a national asbestos testing company. It will then pop out a couple of days later, and they'll again meet the policyholder, take some photos of the damage, and get the results through. I could stay here all night, so thank God this came back as negative 4 days later. We found there was no ACMs, so finally we could be appointed. At that point, the network sends us the claim, and we then appoint a building contract manager. So our building contracts manager goes out, meets the policyholder, measures everything up, and just while he's there, the final time, he says, I better just take a few photos from my file. So he again takes some photos. And then a week later, we end up with some building operatives on site, and we finally start work. And this is what it looks like to a policyholder. But that doesn't tell the full story, because on the first day of work, our plasterer receives a call, and his daughter's fallen over at school and cut her knee. So the plasterer rings the office and says, look, I've got to go to school and sort my daughter out. I'll go and do that job tomorrow. So we phone a policyholder and say, I'm sorry, but we can't start today. We're going to start tomorrow. And then the policyholder, because this is the straw that's finally broken the camel's back, puts a complaint in, and then we have to expend management time managing the customer's expectation and trying to get them on board. And from a builder's point of view, this happens day in, day out. And we get a lot of criticism because we didn't turn up on site, we was a day late and everything. But the reality is, it's the process, not the actual issue with the guy turning up late. So I would say they're the two big issues for me in the market today. And I hope the other builders in the room will confer. So moving on now, what opportunities do exist what are the opportunities? Well, before I can go too far in what opportunities I believe exist in the networks, I think I just need to draw a picture of two bubbles. So there's the bubble that is insurance, building repair world, and then there is the bigger bubble that's the rest of the UK building sector. And what goes on in this bigger bubble influences greatly what goes on in the little bubble. So if you look in the little bubble first, and for the last 20 years, there's a game to be played, and it's been quite a good fun game, really. I've enjoyed playing it, and we play it with people like Jim. So what happens is, it's the supplier's duty to set the price of a job up here somewhere. So you set the price here, So that means the insurance company can employ someone over here, and then they come along and say the price is here, and then you kick off and the game starts. Now, depending how good you are at the game is where your price ends up. But the perfect result is really not to agree the price up here, is to let it come down a little bit, because that ends up with the guy that the insurance company appointed being able to go back and say, hey, look how good I am, I've saved some money, and at the same time you've still got enough money in the claim to be able to get to the end of the year and have made a profit, and then you can reinvest that back in your company and become a better company the following year. But because of what's going on in the bigger market, and also because of all the technology that's come through, the game's started to change. And the games now start to become a bit tense. So we now go out with sophisticated estimating packages, and instead of starting off with the price here, the price is already here. So the price comes in here, but the insurance company's still appointing this guy over here. So he comes along, and he still thinks he's coming to play the game. So the builder says, I'm not playing the game today, Jim, I'm sorry. The price is staying here. But over the last couple of years, up till about 6 months ago, you could still play the game a little bit, because the building industry is pretty much devastated. So there was tradesmen out of work and everything. So you could play the game a little bit and make Jim happy and just drop your price a little bit, get the claim over the line, and then we would go to our supply chain and screw them down a little bit to make that work. But suddenly we can't do that no more. And we can't do that because of what's going on in the bigger bubble. So when we look in the bigger bubble, we look at the people within that bigger bubble, and we find that 600,000 tradesmen have left the industry since 2008. And of those left, 1 in 5 will hit retirement age within the next 10 years. And in addition to that, 54% of building companies haven't invested in any proper training or employed any apprentices in the last 3 years. So then we look at the manufacturing side of it, and we find there's no capacity there neither. In the last 4 months, blocks have gone from 1 to 8 weeks, steel's gone from 2 to 9 weeks, and bricks has gone to 12 to 14 weeks. But last week we were close to 20 weeks for a direct load of bricks. And then this brings us on to seeing all these headlines. And then we find out that the government is about to commence with a £280 billion infrastructure spend, which is going to suck up another 200,000 tradesmen. And so we end up seeing graphs like this. And this is housing starts, which are forecast to go up by 40,000 over the next 2 years. Now, once the graphs like this frighten the life out of me, because once we start building houses at this pace, all our best tradesmen are currently employed building schools and hospitals and servicing insurance claims start to migrate towards the house building industry, where they can earn more money for less effort, basically. So then we start to see graphs like this. And this is Experience Construction Tender Price Guide for up until the end of 2014. And they're forecasting for the East Midlands a 7 to 9% price rise on tender prices. Prices are rising at a pace like I have never, ever seen them. 41% of building companies are currently reporting a sharp upturn in work, and 86% of building companies are currently reporting a skills shortage. And we haven't even started building the new houses or commenced with the infrastructure spend. But this doesn't seem to be affecting the bubble, the little bubble. And in there, I bizarrely find at a time when we all need to be engaged and focused, insurers, not all insurers, because there's a few in there, so there's a few nice ones. I'm just looking at you, see Rob in the front. Yeah. But insurers and their supply chain seem to me to be currently more fragmented and less engaged than at any time that I can remember. So after saying all that, where do I think the opportunities are going to come from? Well, I just think technology is a big step forward, really, and I think it is changing the market. For want of a better phrase, I've called this super contractors. When my car's damaged, if it's damaged in an accident and the insurer takes it away, I don't expect to have to get half a dozen people to photograph it and one person repair the tyres and one does the exhaust and another guy does the engine. I just expect somebody to be able to come along and do it. So when I look at my own company, I think it's completely bizarre that I expect our clients to have to go out and procure somebody to do a correct estimate, somebody else do an asbestos test, somebody else to do the drying. So I believe there's a big opportunity for us here to merge some of those skills together. And then if we can get all that together, and it was quite interesting what the innovation guy said, maybe, just maybe, we can look at some cooperative buying. In the real world of building, we call this building information modelling, but we're light years away from that at the moment, in my opinion. So in summary, we have to stop playing the game, and we have to engage with one another as adult partners. But the really big opportunity is to strip some layers from the supply chain. If we can do that, even with all the price pressures we're all under, overall claims spend will be reduced, whilst at the same time we will deliver a far more professional and a far more customer-focused service to policyholders. Succeed, and I believe that there is just a possibility that insurers might just fall back in love with us and start sending us more claims, which in reality is all that we really want. Thanks for listening to me.